All right, what's good, guys? Today we're going to be doing a weekly bias review session. So basically just finding our bias for the week, kind of for tomorrow, Monday as well, just to kind of like see where we're going to be going in terms of price. And that way we can have our correct bias when we're going out and trading. So over here, I'm on GBPUSD. And first off, what I'm going to do is, I never do this, but I'm going to start off by looking at the weekly. Now, the reason I said I never do this is that when we're trading, at least for me, I'm trading on lower time frames, like way lower, like the 5 minute. So while sure, I care about how price is like moving on the weekly and on the daily, I really don't take that into consideration a ton, just due to the fact that that's looking at price movements in the way bigger picture. So to me, that information is relevant, but it's not super relevant to the scope of time in which I am trading it. But anyways, let's just get into it. So here on the weekly, we can see price is trending down. Obviously, it was trending up here, and then it created this new low, broke it, and since then it's just been trading, going all the way down. Zoom in daily. Now here we can see some horizontal movement from price. Over here, it broke structure to the upside, and it's just kind of stalled, and it really is technically still on an upside trend, at least on the daily. But I mean, if you really look at this is just a pretty horizontal movement, in my opinion. All right, so what we're going to do then is move down to the 4 hour. And now here is where it starts getting a little bit more important. So the 4 hour still holds a lot of information, in my opinion, just because it's more of like it's on a tinier scope, which is more relevant to trading on the 5 minute, the 1 minute, the 15 minute, but it's also on a big enough scope so that it like preserves the information from the daily, all of that. So like imbalances, order blocks. So I really like using the 4 hour, starting out there to just get a general overview of where price is moving, where price wants to move to. So here, it's Sunday, price is moving slow, but anyways, here we can see price kind of moved up a little bit, played around horizontally. Now it looks like it's going back down. We can definitely see that we're like in a downtrend here. Like even though this is a little up, it still hasn't like really officially broken structure to the upside. And I mean, in this 4 hour, we can see imbalances here. We can see more imbalances within there. We can see that one got respected right there, touched, boom, fall. That one got double respected if you look at it. Touched, fall, come back up, touch, fall. There you go. I mean, like these like market structure things that you look for, like these points of interest, they're literally like obvious, and they literally like, I mean, I'm being redundant, but you get what I mean. Like they work a lot of the time in predicting where price is going to go. But anyways, we can see price pushed back up, filled the rest of that imbalance that was left unfilled, I guess, from this tap, and looks like it's pushing back down. So from the 4 hour, I just stuttered there. From the 4 hour, bearish bias. Zoom back down, 2 hour. 2 hour gives us the 4 hour in more detail. Pretty basic. I mean, that makes sense. I'm just zooming further in, so more detail. All right. Here we can see even further this imbalance that got filled. Price pushes up, boom, fall. And now on the 2 hour, what we can see is that there was also an order block here. It was a tiny one, but there's this liquidity here that gets, oh, I don't like that green. And there's that liquidity here that gets swept. Price pushes above, collects all that liquidity, falls down. Price pushes back up, taps that order block, falls down, fills imbalance, taps back up, taps into that order block, fills imbalance. What is price doing? Falling. That's a really bad way of doing it, of showing it. But what is price doing? Whoop, fall down. Exactly. Okay, so on the 2 hour, I can also kind of tell, at least from this, that we have a bearish bias. 1 hour, we can see the same thing, just in further detail. So Now, what I'm going to start showing you guys is how, when I'm trading, I kind of like look for the bias points of interest on lower time frames. So we collected bearish bias from the 2 hour, the 4 hour, the daily, and the weekly, right? So now I'm going to be looking for bearish things on my when I'm starting to trade. So like for example here, I can kind of see like this is sort of an order block. I know there's no like official liquidity swept through here, but we had this kind of like sideways movement, then followed by a move up. And I bet you right now, you go down to the 15-minute, boom, there's the order block. Look at that. Liquidity there, price pushes down, price pushes, boom, back up, sweeps it. Structure broken to the downside, that's that low, boom, structure broken to the downside, price pushes back up, and this is what? Price pushes back up around the 50% mark of that order block. Look at that, guys. Like these markets speak for themselves. Price pushes back up around the 50% mark. Boom, falls down. And what has it done since? It's kept falling. So, for example, what I would do in the morning, now scale down into the 5-minute, I would start looking for imbalances. I can see one right here. That's not a very strong one. The type of imbalances I prefer the most are very, very aggressive ones. So like when it's like this one right here, when it's an aggressive move up. I don't really like them when it's just like kind of like a big stepstone of like movements that like is kind of an imbalance. Like for example, this, it isn't one aggressive candle down. It's kind of like step, step, step. And yes, it's an imbalance just because they don't like cover each other. I don't know how to explain it well, but it's not a very, very high confluence one. Anyways, we have our order block there. Price is moving horizontally. Ignore that. It's a Sunday, so of course it's going to do that. But I'm just saying a demo situation here. I'm going to mark out my equilibrium, high to low. Okay, we identified that this is equilibrium right here. So we have bearish bias. Our discount's going to be above equilibrium, which is right here in this area. So now, looking for imbalances within there. Well, I have this imbalance from earlier I pointed out. Not one that I like, but it's one that's there. So what I would do is then I would scale down to the 1-minute and then look for even more pointers that I could use. So look right there. I know it's super small. But right here, we have this 1-minute order block right here. We have this imbalance followed by that 1-minute order block. That's a big one right there. And even though that's a stepping stool one, you can see that it's pretty aggressive the way it just all falls down. And I mean, it has been partially filled right here, but it's still an imbalance. Now what I'm going to do, I'm going to get rid of the higher time frame points of interest that I marked out earlier, because now I already know that we're in a good area. We're in a bearish point of interest. So now I'm marking things within there so that it's even like higher confluence. So then I'll get into the AM session, and then I could see, ooh, price pushes up. Obviously I would probably wait for equilibrium. I know that's not the low, but discount, fair value gap filled, price taps into the order block. I would wait for reactions, break a structure to the downside, boom, enter. And legit, once you enter, this is what I always recommend to myself. I mean, I'm not a professional trader. I'm not a good trader. I'm just someone who's learning. But this is what I always do. I encapsulate the whole order block. Obviously, that one's a very tiny one. And when they're tinier, they're like less confluence, less probable. So I don't like trading like super tiny ones that are just like tiny movements in price form them. But whatever. You encapsulate your order block or any other point of interest that you could think price could turn around at. So like, for example, some people would place it above this liquidity right here just because price could go up, grab that liquidity, and fall down. It's up to you guys for whatever you like. And then you basically just aim for liquidity. So, I mean, liquidity there, the risk to reward is terrible, but liquidity there, liquidity here. I mean, liquidity is simple. So yeah, that's my weekly overview of GBPUSD. Now we know that this trade will be looking for shorts. This week we'll be looking for shorts. So peace.